we're going to be talking about the truths of trading, harsh realities, and just must knows when it comes to trading. I know a lot of people feel like, maybe trading is professional gambling. Well, there's key differences between actual trading and actual gambling, and some traders turn trading to gambling. Trading is not gambling, especially if you have a defined edge. It's probabilities. Gambling is not proven on probabilities. That's just like hit the lotto. You know what I'm saying? So trading is not about hitting the lotto at all. Most people's struggles in trading, most people's struggles with trading stem from their dissatisfaction of their current job or life situation, which leads them to seek quick success in trading without understanding the necessary process and discipline involved. So this often results in trading similarly to gambling. And, they just overlook their own negative habits. So, with that, trading and gambling can share similarities, but they have a critical difference. Trading requires a technical edge in discipline, and gambling relies purely on chance. It's different. So many traders enter the market with unrealistic expectations. Like, for example, had one student, he traded 0 DTEs every day, no matter what I told him. He just wanted to hit 200, 300% gains because he thought that would make him a profitable trader. And I told him, no, you don't need home runs. Well, he never listened to me. And, he was aiming for like 300% gains. So since he was aiming for 300% gains, he would like risk the entire trade. And that's gambling. That's how likely is it for you to hit a 300% gainer when I look at all your trades and you've never even hit a 300% gainer? Why are you still aiming for that? It's all about having realistic expectations and having a systematic approach and differentiating trading and gambling, because a trader relies on technical analysis, risk management, disciplined execution. A gambler just relies on chance. Sometimes for traders, it could be a little bit hard to like figure out what your strengths are in trading, especially as a beginner. So that's why it's more important to have a routine, so it's easier to pinpoint what are the weaknesses, what are the strengths. If you're literally doing the same thing every day, it's easier to pinpoint that. But if you're just random, it's going to be a lot harder to pinpoint where your strengths and where your weaknesses lie. And then also, like, if we're just talking about like trading, there's two things in trading that make it very different from gambling. And these are the only things that are required to be a profitable trader. First of all, taking high probability setups. Secondly, risk management. I've told you all, it's literally math to be a profitable trader. It's your win rate paired with your risk management. So there's the only two things to become a profitable trader that you need. So first of all, I hope you all understand the importance of risk management. It's essential to calculate your risks versus your reward involved with every single trade. And you should have a risk management plan in place before taking any position. And obviously, by using stop losses, you limit your potential losses. So you should always use a stop loss right after you take the trade or right when you take the trade, immediately. Hard stop loss. And my trading strategy focuses on really strict risk parameters. I calculate every trade beforehand, and I even take slippage into account. By doing so, my average win is literally 3 times the size of my average loss. Without risk management, you're gambling and you leave your trades up to chance. So also, my trading strategy focuses on exclusively taking what I perceive as a high quality setup, an A+ setup. So to even know what an A+ setup is, obviously, like I did that one lesson, supply and demand setups. That one's really helpful for you guys because I didn't really have something like that before I made that lesson. So that one could help you discern, the clear difference between like what a high probability setup looks like, but also through your own back testing, you'll be able to discern the difference between a high quality setup and a low quality setup. That comes through screen time and experience. So you need to have a consistent scheduled routine to be able to implement that into your routine. And only when I focused on taking the highest quality trade that are proven to give me the highest win rates, that's when my trading leveled up. So you definitely want to prioritize quality over quantity. So I want to also tell you guys like bad habits that you should not do. 1, Don't enter a trade if your risk is not predefined. So before you click any buy or sell button, you need a clear entry and exit strategy. You need a predefined stop loss for every trade. If that's going to be a static level, if that's going to be a trailing stop, if your trade goes 50% in profit, moving your stop loss to break even, if that's using the 9 EMA, it needs to be predefined. That's the first thing. Secondly, stop trading if you're emotionally influenced. So if you could even feel an emotion, excitement, fear, anxiety, frustration, greed, just step away from the screen. Stop trading. Don't trade. Emotions lead to impulsive decision making. So if you feel anything, like if you literally feel anything when you're trading, don't trade. Like you shouldn't feel anything when you're trading. It's just like following a process. Always trade with a clear head. Next, stop not journaling your trades. Journaling every trade is not only a discipline, which actually helps you improve your trading because you practice discipline on a daily basis for every single trade, but also it is the key to self-improvement. And every single trader that I've helped actually become a profitable trader, even go full-time with trading, they have an overemphasis on journaling their trades and reviewing them. And then also like something you guys should never do is like don't trade zero DTEs and never ever make an uncalculated like YOLO bet. And usually like YOLOs is like there's actually trading groups out there who like focus on YOLO bets. Like they literally do that. Like every Friday they take a YOLO bet. They'll trade a zero DTE and hope it expires in the money and not worthless. And if you're just taking impulsive high risk bets without a strategic plan, you're gambling. So we want to differentiate trading and gambling. We want to trade on a well thought out strategy and not gut feelings or biases. That's a mistake. So if you notice you traded off of a gut feeling or a bias, you need to journal that, and that's a mistake. So discipline and planning will always outwin recklessness every time.